Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, February 14th. Happy Valentine's Day. The market showed some love to the NASDAQ, but not much to the rest of the indexes today. And I'm coming to you, as usual, from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. You can see over here at the trend gauge. Today was a good day for leadership type stocks. Uh, a ton of volatility pre-market after 8:30 a.m. when CPI came out, and for the first half of the day before things settled down a little bit. Over here on the trend gauge, leadership still showing bullish, and really leaders were what were the stars today. Short term, all five of the major indexes that we track above their 21-day moving average, also above their 50-day moving average, also above their 200-day moving average, but a mixed bag on the slopes of the lines. A lot of them are flattening out, some barely turning positive, some still barely negative. But today, possibly a crucial day. Certainly the lows of today critical because this is an inflection point type of day. It's when key economic data comes out, the market reacts to it, puts in a low, puts in a high, and we reference those points going forward to measure what the market makes up its mind relative to the high and the low of today. It's very similar to if a stock gaps up on earnings, we use the high and the low as inflection points, or gaps down for that matter, the high and the low as inflection points to see if everybody that wanted to buy got in or everybody wanted to sell got out. Uh, Differing opinions among the indexes today for the market. So what just happened? CPI came out 8:30, as I mentioned, extreme volatility, first to the downside, then rocketed to the upside, then sold back to the downside, then the market opened, strong back move back to the upside, complete sell off to the downside. I mean, these are not small moves. We're talking about 1.5% moves in the course of 30 minutes each way, and it just reinforces that we're still in an environment that does not it is not to your advantage to place large bets in either direction. That's what we haven't been doing here. And as long as we maintain our support levels on pullbacks, we're going to give the market the benefit of the doubt, put a couple more toes in the water, maybe take some things off if they're underperforming, put a little bit of more money to things that are outperforming, and wait for a clear trend that may never come all year. Um, Today was CPI basically in line. I read positive reviews of it. I read negative reviews of it. The market had both positive and negative reviews of the numbers, as I said, pre-market and then after the market opened. Very volatile morning before things settled down. Here's where the dust settled. G6 leading index up 0.93%, led by ARK-K. S&P ended up basically unchanged, down 0.03%. NASDAQ 100, the leader, up 0.74%. Dow down 0.46, mid caps barely positive. Russell 2000 small caps barely negative. Global diversified 60/40 down 0.1%. In-house GROTECTION up 0.12%. We made a buy after hours on a stock that is gapping up strongly on high volume Airbnb. We took a 1% position, starter position in that. So if you look at your account, it will show less than this because it calculates the end of day balance based on what the stock was at the close. But when you buy at the higher. So it's about a 0.8% difference is what it shows after the buy, but at the close up 0.12%. So let's dive into it. We'll go through the indexes and then we'll show the tail of the tape, hit the highlights, and then a few charts. Start off here, of course, with the S&P 500, and really what you want to look at is a 5-minute chart here. This up down action. Add very similar action to what happened pre-market. We started out down, big move up, big move down, moving back up. The market opened, another move down, another move up. It was it was typical of what we've seen with the market over the last year, honestly. So nothing really should surprise me. But the speed of some of these moves uh, leaves you wide-eyed at times. But like I said, as long as we're holding support, you don't give up on the market. And that's what we did. We've been speaking. Let's go to a 60-minute chart here. We've been talking about how various levels, namely 4,100 and 4050. We broke 4,100 for last week for a little over a day. Reclaimed it yesterday, tested it today, and it held. That's a good sign. So 4,100, tested again, undercut, reclaimed. Um, and that's the benefit of the doubt that I'm talking about. You can see the higher high made here relative to yesterday. So uh, where we ended up, we'll go to the daily chart, is at the top of the range, which is good. Undercut and reclaim of the ADMA, which is good. Basically closing unchanged is good, considering that we made up the ground to the downside pre-market and also intra-market. Uh, as far as the bull flag goes that I've been drawing, we're basically kind of right through the top of it right there. A move above today's high would be a clear move out of that bull flag. So that's what the bulls will be looking for tomorrow. NASDAQ 100 uh, just to the top of its bull flag also, although, up stronger than the rest of the market, but it had been lagging. Look at the relative strength line here. It had been lagging for about the last 6 sessions before yesterday and today. This hookup on the NASDAQ or on the stochastic is a positive. We're seeing that in all the indexes except for the small caps. And we tested this 300 level and held it today, undercut and reclaimed the ADMA, also good. There's some distance between the 21 by 3.5% and 8.2% above the 50. That's a little extended, but the slope of the line of the 50 is just barely turning up. So historically, you tend to get more extended from a line that's more on the flattish side than one that's been trending up at least as long as the the um, the length of the line that we're referring to. So in other words, we have been trending higher for more than 21 days on the 21 EMA. So the distance between that is legit, but barely trending higher on the 50-day for over the last 50 days. And you can't really judge the distance because of that. Let's go to the Dow. This was the loser on the day, but did bounce at the 21-day exponential moving average, just still going sideways around this 34,000 level for 3 weeks now. Relative strength over the last week and a half, relative weakness today. Let's go to mid caps. Bounced at the 21, undercut and reclaimed the ADMA today. All good stuff. Again, basically closing unchanged. Small caps just down slightly, basically closing unchanged. Bounced at the 21 again, undercut and reclaim of the 8. This is the only index that's neutral from a stochastic standpoint. It's mid-range. It has trying to hook up. It's flattened out, but not really hooked up. And again, this has really been the relative strength laggard over the prior week. So there's your small caps. Let's go to the VIX. This is an anomaly today with what the indexes did. The VIX down 7.8%. It had been playing around that 50-day moving average, clear break below it, and a clear break below the 21 EMA, and trying to pull the slope of that line lower. So the VIX certainly not showing extreme volatility or extreme fear with a move down 7.82% today. Let's go to the dollar. As you might guess, with the indexes being all over the place, this also was all over the place intraday. You can see the exact opposite pattern of what you saw in the market, same situation pre-market, formed this big cup and then just flagged into the close. Let's go to a daily chart for the right in line with this tight consolidation that we've seen now for 7 sessions above the 21 EMA. Let's see what tomorrow brings. How about bonds? Here's the broad bond index. It was down. Let's go to the 5-minute chart. You'll see volatility there. Also up, down, trying to reclaim it and then flagging into the close. Let's go to corporate bonds, LQD. Also down, but closing at the top of its range. Junk bonds, JNK, basically flat on the day, and TLT, the 30-year or long-term bond, down on the day. If bond prices are down, we should expect rates to be higher, and they are. Here's the 10-year up 1.18%, continuing to trudge higher along that ADMA. And I want to point to you back to August here when bonds put in a bottom. The 10-year put in a bottom, came back above the ADMA, and went on an extremely strong run from August through September through October. Market's going to have a problem if the run like that continues after the sell-off stopping, because you can see here's the relatives. Here's the line of what the S&P was doing during that entire time, and the market's trending lower while the rates were trending higher. The result of today, let's go to TYX first of all. This is the 30-year, also up, but note the 10-year up more than the 30-year was up, which means the curve got a little bit more inverted today, or closer to inverted than it was relative to yesterday. Again, here's this long, strong trend up in interest rates last August. Uh, the market added another 25% with fair certainty that we're going to have three additional, or three total 25% basis point raises. After the last Fed meeting, it was just for one more and then a stop, but the odds are for three total now before we pause. And if we keep getting strong economic data, or data with inflation just being in line, not coming down more than we wanted it to, there's a concern that rates will have to be higher for longer. That won't be good for stocks. I think what you will see is the volatility continue, but again, we're trying to put up with the volatility as long as our key levels are holding on the indexes and leading stocks continue to act well. And right now, there's a check mark for the bulls in both of those columns. Let's flip to gold and gold stocks, GLD, basically unchanged today, extremely oversold on the daily chart now. GDX up, finished near the high of the day, also extremely oversold. Silver, really not worth talking about much anymore. This is gap down and continues lower, very oversold. But gold and GDX are at least worth still looking at. Silver, Bitcoin up 2.7% on the day. Interesting. It kind of acts more. You can see the up, down, but then up into the close. Bitcoin seems to be more in sync with the NASDAQ 100. And you saw that again today. So those are the major indexes. Let's go to, well, let's take a look quickly at and basically the equal weighted indexes, RSP and QQEW, were basically in line with their market cap weighted brethren today. So let's go to the tail of the tape now, hit some key highlights. Stochastic index improving. VIX, as I said, down 7%. Here were the numbers on CPI, the extreme volatility intraday. This was nuts until the 3-hour base at the end. Here are the sectors that were up and down. Here is what we're still holding in the portfolio. I'm going to show you three charts because we added Airbnb to the portfolio after hours. And here's what we did. Intraday added to ON, it was outperforming. BA, it was acting strong out of the gate, and SPXL. We sold, we also bought ARK-K, sold QLD on the reversal when it got back to near even from our entry point. We added TBT with the rise on interest rates, Airbnb afterwards, and ARK-K on the reclaim of the ADMA, up, down, and back above the ADMA today for ARK-K. We'll show those charts. Bottom line for today's CPI volatility ends with the S&P 500 unchanged, NASDAQ 100 logs a gain. Today's highs and lows are clear reference points going forward. So let's take a look at the changes in the portfolio today. ON added to this off of the ADMA when it turned green, when the market started rallying. This was really strong all day, didn't give up much. From 87 back down to 85. When it turned green, somewhere around here is where we added to it. Very strong into the close, closing near its highs, much unlike the indexes, but in line with what the S&P was doing or what the NASDAQ was doing. And semiconductors continue to be an extremely strong sector. We also added to Boeing. They got a big order on planes today. We're down a little bit. We added around 220. You can see the breakout attempt here with volume. It had heavy volume all day. So Boeing continues to, after shaking everybody out, including us for part of the position below the 21, it's been showing relative strength over the last 2 weeks. We added SPXL. That's basically the S&P chart. ARK-K, ARKK. So we sold SARKK yesterday when ARK got back above the 21. And if you zoom in, just take my word for it. ARK is above the ADMA, and that's kind of how I'm going to play this trade. This trend continues to trend above the ADMA. I'll stick with it. If it moves below today's lows, it'll be gone pretty quickly. TBT. When I pointed out that move prior in rates, this is what I'm looking for with TBT. So it's kind of a contrary play. If the stocks, we get stopped out on this, pretty certain TBT is going to continue to go higher. So it's a bond inverse. It's a bond price, inverse bond price. Geez. Rates goes up, this goes up. That's the bottom line on this. And that was the trend with rates today and the reaction, especially with the Fed fund futures putting in that additional 25% basis point add. Airbnb, we got in at 132 after hours. It's trading at 132.40 right now. Big gap up. We have some parameters that we use on buying gaps. They don't always work, but they work a strong percentage of the time when big volume is tied to it. And huge volume after hours, almost average daily volume has traded on Airbnb. So when you get a multiple of an ATR move and you get huge volume, it's a buy signal. The odds kind of work in your favor with this. So we took the initial 1% position. We'll see what happens overnight with the market. This had very favorable volume patterns going in to its earnings report, and a bunch of their profit was because they're able to invest all the deposits that everybody's given them and get a reasonable interest rate out of a money market right now is one of the things they said on their earnings call. So good for you, Airbnb. Let's talk about some things, something that just didn't work. This was CRDO was a leading stock in the market after hours. They're down, cut in half, down 50% after hours as their biggest customer cut a bunch of orders and they dropped their revenue almost in half. That's brutal. I'm sorry if anybody is in this, but it was absolutely one of the stocks. It was in the 21 over 21 as of last week. One of the strongest stocks in the market, never faltered while the market was pulling back, riding the 8 like a champ. Cut in half out of the blue. That's brutal. GFS, one that is added back to our list today after breaking out on big volume, 214% volume, up 8% through the cut base. Great earnings growth. The sales only 14%, but the earnings growth and the reaction with the strength puts this on our list. So we'll be monitoring this going forward. And that's going to wrap it. As always, love to hear from you. Don at revereasset.com. Uh, what we do at Revere is a combination of active management designed to protect the downside. If you're approaching retirement, you do not want to get caught in one of these severe bear markets. We managed to dodge it. Last year, our max loss was less than half of the maximum loss last year. We've got some rules that get us out. The main rule is, what is the market doing relative to the 200-day moving average? That's the black line, because history shows us that all of these occur beneath the 200-day moving average. If you have just that one rule in your account, getting out of the way under the 200 can save yourself a lot of capital and a lot of heartache. So as always, love to hear from you. Don at revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much you can keep. We've set our portfolios so as long as we're above the 21 here, we're going to have 60% of the portfolio equivalent long in the S&P and using growth stocks to provide the alpha. So that's that's when we get more invested relative to a 60-40 portfolio. And if you're interested in this approach, reach out. So ending up the Valentine's Day edition of the Revere Market Insight video. This is Don Vandenbord telling it like it is. Thanks for listening and have a great day.